I think they are focusing on the fact that there is you just mentioned before, 23% of the latest bounce has been concentrated in a handful of biggest technology stocks. So they think actually that maybe the bond market should finally pick up and they could give more return than the equity market. And I think that after, the bull market started 2 years ago, and the current bull market is already up 60% for the S&P 500. So I guess that this is maybe one of their call, and they are maybe a bit more cautious about what could happen in terms of volatility after the US election. So not totally agree with them, but yes, maybe a less fantastic bull run, yes, next year. And the coming years.
Yeah, I mean, I completely take your point then, John, but would you not say then perhaps we're getting a broadening out of this market by the looks of it? So it maybe not led by tech, but tech along with the others are then moving higher. Doesn't that actually mean that the market would get more in terms of, or speedier with regards to its uptick?
No, I think that, the question to know if the artificial intelligence, team is in a bubble is the question mark. And I don't think that's true at all. If we look at the projected global market for AI by 2030, it's around $1.6 trillion, and it's expected to grow in the coming years. So I don't think the tech, I would say what people call the tech bubble is behind us. I think that the energy stocks and everything what is related with energy that should fuel the AI stocks, and also the cryptocurrency is also a new team that is coming and going around that could bring also some pace to the stock market. So I'm not really sure. I'm quite constructive, honestly.
John, very good morning to you. A couple of questions for me. Are we looking in the wrong place for the destiny of the US Treasuries? We're spending a lot of time talking about policymakers who, quite frankly, can't predict the data any more than the rest of us, it seems, despite their wealth of data points. Instead of looking at interest rates as the driver of the Treasury market, shouldn't we be looking actually at the supply of Treasuries that are going to be on the market, given the extraordinary spending plans and lack of balancing the books, so to speak, from both presidential candidates?
Yeah, I totally agree. I think next year the theme will be of course the debt, and how should the U.S. government refinance himself. And we know that even if it's Kamala Harris or Trump, it will be the same thing. So but we see that the direct impact is quite hard to understand, and the economists are more talking about inflation that could be driven by higher debt, higher spending, but this is not the short term, this is more medium term. So I would say that yes, of course, that will be the theme of next year, but will it really drive the stock market more than the Fed policy? I'm not sure, Steve.